It's already that time of year again where we start to look ahead and consider what's in store for the stock market in 2026. I've done this every year now for the last few years, and it's always interesting to get your views and opinions. Now, thousands of you have voted on the polls that I've published on the YouTube community page, covering everything from what you think will happen to the S&P 500, the FTSE 100, and even interest rates. I'll go through each of the results one by one, and I'll also review what you said just 12 months ago to see how good at predicting you really are. Oh, and just for a bit of fun, I'll throw in my own predictions as well, because why not? Okay, first up, I asked the big question, what will the S&P 500 end 2026 at? For reference, as I'm making this video, the S&P 500 sits at around 6,800 points. Now, I like to use the S&P 500 as the benchmark for the wider stock market, as it's considered the gold standard and most people have heard about it. Anyway, let's take a look at this year's poll to see what you thought. I think the results for this year are pretty interesting. Most of you are sitting around this middle area, saying that you think the stock market will rise a smaller amount. However, this also includes a good chunk of you who think that the stock market might also fall a little bit too. So this tells me we've got a good balance between the bulls and the bears. I think this reflects what's been going on over the past few months in the wider markets, as there's been a lot of fear about the AI stock market bubble. Lots of people have been suggesting that the stock market is way too concentrated in big AI names like Nvidia, and the valuations are starting to get worrying levels as companies are spending huge money on AI infrastructure, yet aren't making the money to justify it yet. However, on the other hand, most of the technology companies in the market, especially the big names, are making more money than they ever have before and are still growing well into the double digits, even if they might not specifically be making money from the AI investment just yet. So it's not like they're running without a profit or going to go bust anytime soon. This really is a question whether the investments today can live up to the hype of the future, and as we should all know by now, none of us know what's ahead in that future. Now, even with that said, 1 in 5 of you still think that the AI boom continues in 2026 and the S&P 500 runs to 7,500 points and beyond. On the other hand, just 13% of you are really bearish, suggesting that the stock market might actually have some kind of crash. I can't wait to see what actually happens in the next 12 months or so. You can bet that I'll be making a video just like this one, so please make sure you're subscribed if you aren't already. Now, what about 12 months ago? How good were you lot at predicting this amazing bull run with a 16% gain so far this year? Have a look at the results now. You know what? I think you guys actually nailed it last year. And in fact, almost half of you said that the bull run would continue and the market would be above 6,200 points. What's funny is that I didn't even consider the fact that the market could go much higher than that. So even my bull case option for you to choose wasn't even bullish enough. Now, this does leave just over half of you who thought that the market would either fall or stay about the same. Now, I really hope that you didn't keep everything in cash and wait and try and time the market, but let me know in the comments if you want to own up to being someone who predicted a crash and regretted it. Analysts who cover the market also made some predictions and price targets back last year, and for reference, here are a selection of them. It's not surprising that they all copy each other and centered around the 6,500 point mark. They aren't miles off, but I think most people have been caught off guard about just how well the market's done this year, considering that so much has been written about a guaranteed crash and potential recession. I'll be interested to see how these guys do next year as well. They're always changing their targets every month. I mean, JP Morgan, for example, were really bearish a few years ago, yet they had to change their tune to finally just accept that they were wrong. Predictions like these are absolutely useless and they serve nobody apart from the people they're trying to sell to. I tend to ignore all of them and use them as a good reminder that nobody has a clue what's going on, but still fun to make predictions though. Okay, moving on to the next prediction, I asked all of you what will happen to the FTSE 100, the flagship index of the biggest 100 companies that are listed on the London stock market, but actually trade all over the world. It's always an interesting topic, this one, as the FTSE 100 is quite disconnected from the UK economy as a whole. However, a lot of people are still heavily invested as it's our home market. Now, as you'll know, the FTSE 100 has had a really good year and it's benefited from a couple of things happening at once. Firstly, we've seen some investors shift their money away from the US market as the fears of a stock market bubble have been grown. And then we've had strong performances from the likes of banking stocks and the commodity players as the prices of raw materials have continued to rise. Let's not also forget that the pound remains quite weak against the dollar, which means that any profits generated in dollars actually give you some good returns. However, it's interesting to see that this year to date so far, the pound is about 6% stronger from where it started. I'll have to keep an eye on this one to see how it progresses. Remember, with a strong pound, you can buy more of those US investments, and it's useful if you're building your wealth. However, if you're someone selling your US investments, you want a weaker pound, and it's not something we can time, but it's useful to know why the value of your investments change so much. Even if the stock market stays the same, it's all down to exchange rates. Now, here's what you all thought about the prospects of the FTSE for 2026. About 75% of you are in this middle section here, where you think we'll see a slight rise or maybe just keep things around the same figure. I'm guessing that a lot of you might think the FTSE 100's run up quite a lot so far, meaning that it probably won't go much further. Also, let's not forget that even if the FTSE 100 stays at the same level, it's also one that pays quite a lot in dividends too. So if it did stay about the same, you'd still make around 3% in dividends if the current yields stay the same. On that note, if we look at the total return of the FTSE 100 this year so far, which includes those dividends, we actually get around 20% for the year, which is way above the historical average. The FTSE 100 has had a really good year so far, all things considered. Let's hope that doesn't change by the time I put this video out. Going back to the poll results, we still have almost 1 in 5 of you thinking that a crash is still ahead and the market is about to make a pullback. And on the flip side, we do have some mega bulls who think that the FTSE 100 could reach more than 10,500 points. Last year, here's what you all thought was going to happen. This one's pretty interesting and shows just how off most people were. Half of the people that responded to my poll last year thought the FTSE 100 would stay flat while producing some dividends. Then almost equally, about 1 in 5 of you thought the index would have a small correction or head even lower due to a recession. Finally, 13% of you actually got it right. The UK market would go all steam ahead. However, I was way too bearish when I said that 8,400 would be some kind of bull market, when in reality, it's now sat around 9,600 points as I make this video. So well done the small number of you who got it right. I hope you put your money where your mouth is and made a decent return this year. Okay, time to move on to another hot topic that has a huge impact on all of our lives: UK interest rates. Now, the UK has had a bit of a wild ride when it comes to interest rates over the last couple of years, and a lot of this was down to the high levels of inflation that we'd seen. We started the year at a base rate of 4.75%, where it had been since November 2024. As of making this video, the rate is down at 4%, and the markets are predicting that we get another cut before the end of the year, which will leave us at a rate of 3.75%. The Bank of England has got a tough job at the moment. While inflation did come down since the peaks, it's remained a lot stickier than expected, and it's hovering around the 4% mark. Unfortunately, we seem to be very far off the 2% target that they're aiming for, but any rises in the rate would potentially stop any growth, as the UK economy has been really sluggish. We're really between a rock and a hard place at the moment. Anyway, here's what you all think will happen this year with rates. Half of you think that we sit between 3.25 and 3.75%, where it will probably change before the end of the year. A quarter of you think it will stay about the same, then an equal split of you think the rates keep getting cut, or you think they get forced up higher as inflation remains out of control. This is such a hard one to figure out, as really anyone's guess is as good as another. Just remember that with lower rates, you'll see lower returns if you're a saver, and this will also mean that loans and mortgages get cheaper too. So in theory, more money gets pumped into the system, forcing the prices of things like assets to go up. Now, if people can only get 2 to 3% in savings, they end up choosing to put money elsewhere, like in the stock market. And vice versa, if rates go up, money becomes tighter, and we'd expect savers to see higher returns, and we'd also expect to see asset prices fall as there's less money flowing around the system. I'm sure many of you out there are eagerly awaiting to see what happens next, especially if you've got a mortgage renewal due very soon. If we look back 12 months, you can see that a lot of you expected rates to be higher than they are now. Almost 40% of you were split each way on thinking that rates would be above 4% in some way. If we get the rate cut that is expected in December, this will mean that 19% of you who voted between 3.5% and 4% are going to be the victors here. And if you are the 7% who thought that rates would be at 3.5%, try again next time. Maybe you'll get it right this year. We'll have to wait and see. Okay, for what it's worth, here are my predictions moving forward. But just before I talk about them, why don't we see how I did compared to last year? I said the following in my video from 12 months ago. It's pretty embarrassing. I said the S&P 500 will be 5 to 8% up. Clearly, I wasn't bullish enough here and was way too cautious. Thankfully, at least I didn't change any of my investing habits and just kept going. Secondly, I said that the FTSE 100 would increase by about 5%. Again, way too cautious, and I should have been a lot bolder. Interest rates, I guessed at 4.25%. Not a million miles away, but if we do get moved to 3.75% in December, then I can safely say that I got nowhere near that one in this one. Then finally, I did say house prices would rise 4%. This wasn't a topic I actually covered in this year's poll, but the real results were more like an increase of 2%. So again, I was quite a way off. So with that out of the way, why don't I make some more predictions for 12 months' time, and hopefully I'll show just how useless I am at making predictions about anything to do with the stock market. For the record, so is everyone else, so no matter how much they convince themselves that they are geniuses. Okay, so for the S&P 500, I'm going to say another 12% rise to end the year. It will be a very bumpy ride, but ultimately money needs to be in stocks, and this is one of the best places for people to protect the value of their cash in the long term from inflation. For the FTSE 100, I'll be a little bolder this time and say also a 12% gain, including dividends. I think there'll be a trend of people getting worried about the valuations of tech companies, so some investors will seek out those value plays, and you tend to get a lot of those in the FTSE 100. For interest rates, I think these will have to come down. Even though inflation will remain high, the economy is going to need some more cheap money to grow. So I think we could be ending 2026 with rates around 3.25%, staying around that number for a while. Now, the key thing for me is that regardless of whatever happens, I'll be sticking with the same plan I've always had when it comes to my investments. Now, look out for an updated video on that one as we go into the new year. Anyway, I'm looking forward to your thoughts in the comment section below. See you in the next video, and as always, happy investing.